Good day, everybody. Jeremy here with your weekly market bias report for Sunday, October 15th, looking at the trading week ahead. Diving right in here, looking at the S&P futures chart. Futures have been open for about 2 hours now on Sunday here, and we so far have a little bullish harami candle right here. And for anyone that doesn't know that pattern for candlestick analysis, a bullish harami is basically a small-bodied candle, bullish candle that is contained within the larger bearish candle that precedes it, the body of that candle that precedes it. So that does show a little bit of slow momentum as of now. We have reclaimed both the 9 EMA and the 20 SMA that we did break and close below last week on Friday. So that is a very, very good sign for the bulls kind of stepping back in to try to buy that dip a little bit. Once we got this massive rally off of the 200 period moving average last week, midweek we kind of broke out, came up, tested against the 50, pulled back, and at this point we still don't 100% know if this is a confirmed bearish flag pattern, or excuse me, bullish flag pattern here, because we had the bullish move, bullish flag coming down counter trend, and now we're hoping that this acts as support. The price has gotten above these two moving averages again. If it closes above that, that would be a very good sign, one, for slowing momentum, and two, the bulls stepping back in and forming a higher pivot low. Obviously, it is not a higher pivot low until we do get confirmation to the upside, so we are looking for that ultimate confirmation still. But a close above these two moving averages would be very, very beneficial for the bulls. We also have a crossover on the MACD here. It's not quite back to positive territory, but our signal line has crossed back above the MACD line, which is really, really good to see. And the RSI, while not overextended anymore, is still kind of just hovering here in these lows. If we get the RSI to break back above this little double top right here that we had amid the volatility from last week, I would consider that to be confirmation to the upside as well. So ultimate confirmation for the bulls stepping back in isn't going to come in until we break above this pivot high, especially with all this volatility. That kind of correlates to the 50 period moving average right here. But if I kick this out to a weekly chart, you'll see this alert, this yellow line that I have right here at 44.39 and 50 cents. That's going to be the actual ultimate confirmation to the upside, in my opinion, because that will get price back above the weekly 20 period moving average, which is exactly where this rally from last week coming into Wednesday, Thursday hit its head and got slapped back down. So ideally, a close above that level would be our signal for the bulls to be stepping back in, and that also would be a break of the diagonal resistance line here. So mark 44.39 and 50 cents on your futures S&P chart and use that for your trading benefit. Whether you trade the actual S&P futures itself, or the S&P, or are just looking at stocks within that indice, this is going to be kind of the confirmation that bulls have indeed stepped back in and are looking for that next run. Going out to our NASDAQ. NASDAQ has held up quite a bit better. Didn't have nearly as aggressive a sell-off. It is still technically below its 20, although the 20 period moving average on the weekly chart here is actually just at 15,205, which is just a stone throw away. So we are very, very close to getting back above that. On the NASDAQ, we would probably want to get back above that diagonal resistance as well. If you go into the daily chart here, we can drop in, and if we do close back above here, even if we haven't crossed back above the diagonal resistance yet, this would technically be a higher low on the daily chart, so I wouldn't blame anyone from doing a tight putting a stop in down here below the 20 period moving average on the daily chart around 15,000 even, and then playing from there to the upside. I do feel like the bulls have a bit of an edge here, despite the conflicts with Israel right now and the potential for war and all of the negative headlines coming around, the negative inflation data that we had last week, there are a lot of reasons to be bearish. Like, let's just call it what it is. There are a lot of reasons to be bearish right now. But with that said, this time of year, if you believe seasonality, we usually have a rally from mid-October through until the end of the year. A lot of people call it the Santa Claus rally because people are in shopping mood. They like to spend money. And that obviously benefits the stock market and a lot of individual stocks in specific sectors. So looking at this, we can stop the bottom here, wait for a trigger. Today's candle would be kind of the slowing momentum candle, and then we would want Monday's candle to close above that for our confirmation for that pivot. Take a scale in approach, especially on the NASDAQ here. If you do play anything below this diagonal resistance line, maybe do a half position below it and then scale in with another half above it once we do break. And if we go out to a weekly chart here, you can see a break of that. We then would be targeting the all-time pivot high, or not all-time pivot high, excuse me, the more recent pivot high here back from July. And then anything past that back up to all-time highs would be kind of the two targets for the end of the year. Going out to the Russell is in a very different situation. The Russell is basically down here at the lower end of a long-term, about a year and a half long consolidation channel where it has just been whipsawing all over the place. And if we take it into a daily chart, you can see the downtrend in the Russell 2000 and the small caps has just been nasty. We do have potential for support to be forming here. This could potentially be a double bottom, tested multiple times here. So if we do see some buying come back into the market and seasonality return, really a close back above this previous pivot from last week, which comes in around 1802, let's just call it 1803. I'm just actually going to create an alert there for myself as well. 1803. That would be considered confirmation. By that point, honestly, you're so close to this diagonal resistance line with the decreasing 50-period moving average that I doubt that there's actually going to be a trade on the index itself, but that would be an improving condition and lend itself to further seasonality develop if we see the Russell, the NASDAQ, and the S&P all kind of shifting towards a bullish thesis. At the same time, that gives a little bit more credence to our trades in the S&P and the NASDAQ. So definitely focusing on S&P and NASDAQ, using the Russell 2000 and setting these alerts more just so that we know what's going on in the underbelly of the stock market, but not necessarily looking for trades in this area. Now, the two biggest things we probably need to be keeping our eye on this week are crude light. And right now, you can see we've had just some massive volatility step into crude light. We had a huge candle here moving to the upside, basically off of the Israel-Iran news and worrying about furthering of the potential for all-out war in that part of the world. Obviously, our hearts go out to everyone that is being impacted by that conflict right now. And while we never want to profit from those kinds of situations, as traders, it's our job to be aware of conflicts and geopolitical tensions that might impact us positively or negatively, and make sure that we are positioned so that those don't hurt us. So that is a very important conflict to be keeping an eye on right now. If you are a trader, you need to know what's going on in that part of the world, and you need to keep tabs on that as that develops. Crude light, oil is going to be a big thing that is going to be impacted by that. Obviously, if war breaks out, that would be bullish for crude oil. Demand would go through the roof because, let's face it, conflict like that demands a lot of oil. So if war does break out in that area on any large scale, this crude light chart could develop into a bullish pattern very quickly. Hopefully we get some consolidation here regardless, just below 88, and then any break above 88, in my opinion, is playable. Ideally, I would love to see this pull back and retouch this 9 EMA here. That's why I have this lower alert set at 86.25. Any retracement into that, I'm probably going to be looking intraday to see if I can find any kind of an entry signal intraday on crude light. And this is actually going to be a pretty good hedge against the market as well, because if war breaks out, all out war breaks out in that area, it'll be bullish for crude, but it'll also probably spell disaster for the S&P and the NASDAQ. That will probably hurt those charts more than it will help. Obviously, the futures market does not like conflict or uncertainty, anything like that. So if that does break out, crude light could act as a hedge against that volatility in the overall stock market, because it would be going up as the rest of the market presumably would be going down in that environment. And similar, we want to be keeping an eye on gold. Gold will act very, very similar to that. Is the flight to safety play. People have been looking to gold for safety in their portfolios and in their finances for way, way longer than you and I have been alive, and it'll continue to do so for the foreseeable future. Some people say that Bitcoin can be included in that as well, and I actually do kind of have a little bit of an interest in Bitcoin right now. I mentioned that last week, that I'm starting to warm up to it again, and looking for potential patterns in Bitcoin. But with gold, you never want to chase these big candles like that. Let this develop. If we got 2 or 3 days potentially of just profit taking and or digestion here somewhere below 1950 and above, let's say 1925, anywhere in this range, just chopping back and forth, leading eventually to a breakout of the diagonal resistance here, would be a huge, huge opportunity for gold. So I'm looking for a couple more days of consolidation here, sideways action here, and following by breakout and resolution to the upside here on gold. Potential target back up to 1976 and then probably up to 2000 before it would stall out at any capacity. I do see gold probably smacking that 2000 level here fairly soon. And since we mentioned it, let's just wrap up and go over to Bitcoin real quick. The chart pattern itself here, if you look on the daily back for 1 year, it's all over the place. It had this nice uptrend here, broke, and now we've been in this little downtrend for the last couple of months. But if we zoom in here and just look at the last few months here, we had this downtrend. We've gotten back above that diagonal resistance, and now we are just sitting right on top of all these moving averages that have just pinched themselves right into a very, very tight range, and the price is currently sitting right on top of that as support. So with that said, a potential play to the upside could be not too far away here. I might even day trade something as close as a break above 27,500 with a stop tight just underneath this cluster of moving averages, maybe around 27,000, and then playing back up to the previous pivot highs around 28,300, 28,400, somewhere right in here. So that could be a potential play. If we kick this out to a weekly chart and zoom in a little bit, the only problem with that that we just discussed is we do still have a cluster of moving averages on the weekly chart directly overhead. So I don't know if we're going to get quite the reward to risk here. We could potentially sneak in a trade, but you'd have to have very, very tight stops and be looking to be aggressive on that. And I don't know if right now is the time to play hero. So maybe just watching this one for this week and waiting for it to develop and give us a little bit clearer pattern. If we did have this press up and consolidate here, so maybe we have another candle or two higher, and then we press into this ultimate breakout around 28,500, and then break above that, that could be a very, very good trade. So ideally, we just get some nice controlled action, go up to about 28.5, go sideways for a few days, and then break. That would be the play that I would be very, very interested in. So hopefully the trading gods give that to us. We'll see. Obviously, keep this on your radar. Set a couple of alerts on Bitcoin if you trade that instrument, and watch to see if we get that pattern. And finally, let's just wrap up here real quick with the week ahead, looking at our economic calendar from Forex Factory. It's going to be a fairly light news week, honestly. We have the state manufacturing index coming out Monday. We have core retail sales coming out Tuesday. Building permits, unemployment claims, but really I'm not expecting much movement from this in the stock market. Really, I am anticipating most of the movement this week being from technical analysis and also from earnings. So if I toss this out to earnings, you can see everything in pink here has earnings coming up within the next couple of weeks, and that is most of the market. We have a huge number of companies reporting between now and the first week of November. So if you are trading individual stocks in the next few weeks, be cautious. Look to see if the earnings date is coming up. And as always, we never want to trade stocks that have earnings coming up, at least for swing trading purposes, within the next like 10 or 12 days. So keep that in mind and make sure that you don't see that little icon on the side of your trading platform saying, hey, earnings is coming up on this. Hope that helps, guys. Enjoy your trading week, trade safe, and as always, let me know if you have any questions.